GETCRACK. Wake up, motherfucker.
Away. Nasdaq futures down 2.6% at time of as I'm looking at them right now. What are you taking away from a market's perspective about this wake-up call?
I think it's really massive, and I think it's massive for two main points. It's not just about the challenge to U.S. hegemony in the space. It's not about the disruption potential there. That's a kind of a side story. And I think Robert Lee's analysed it perfectly there and summarised kind of the sector challenges there absolutely perfectly. And that doesn't change the fact that NVIDIA still got monopoly in the space, and many of the big names do as well. The reason this is such a game changer is that it's about cost. It undermines the immense amount of money that's been spent on hardware by the US mega cap tech stocks. Sure, they want a dominant position, but it now looks tenuous that they're going to get a return on that investment. That was always difficult. But now, and this is the second aspect, now that this is open source, it really makes it very unlikely that they're going to be able to justify the return on investment, given that there's a much more cheaper alternative out there for the world to use. So ultimately, this is good for global growth. It is good for global productivity. It is positive for global stocks, but it deeply undermines the massive premium that we pay for US mega cap stocks, that exorbitant privilege that we've got. And therefore, I think this is the catalyst that people are looking for. Combined with it is a perfect timing of Trump really kind of putting an extra cost on US trade. I think it is the catalyst to end 15 years of US stock market exceptionalism.
That's quite a big call. Let's talk about the ripple effect that comes off that. Talk to me about the most correlated assets to that story. It's interesting, Bitcoin is down this morning. That obviously is being maybe a reflection of what we're seeing in Nasdaq futures. How far do the ripples spread and how quickly do they go?
So I think, first of all, this is about a relative performance idea. It's about undermining U.S. exceptionalism. It's not. So it's saying that U.S. stocks will fall further in bad times and rise less, kind of in the good times going forward. But you're right. In the short term, while we're focused on U.S. tech negativity, which may last for the week, then crypto is really suffering. Now, crypto seems to be suffering from a few aspects. One is I think there's disappointment that the Bitcoin reserve hasn't been announced, and people are wondering whether it will even be a Bitcoin reserve or some other crypto reserve. And then you've got the CEO of Coinbase coming over the weekend saying, look, there's 1 million new cryptocurrencies being created every week, and I think this kind of undermines the sector. I saw a piece out there, I've not checked it, verified it, but there's apparently 36 million tokens out there, which shows kind of the competition in the space for kind of these arbitrary lines in a data spreadsheet. So I think that overall, crypto is going through a tough period. It is not helped by the losses in US tech. There's definitely an overlapping investment sector. There's an overlapping kind of idea that US has leadership under Trump in both crypto and tech, and those ideas are being undermined. So I expect that US tech outperformance is now over, and I expect crypto's at least got a briefly tough period ahead.
A look at U.S. futures, yes, in case you're just joining us right now and wondering why some of these contracts are down 2%, 1% on the S&P futures. Yeah, well, you got to blame is it the bandwagoning? Is that the verb there on the DeepSeek trade? So the opposite of this is obviously a lot of the related stocks in China are actually moving to the upside here. And might this give you something to think about as far as stretch valuations in the U.S., and is there an alternative, actually?
Yeah,
I think it's a question here.
Seeking deep meaning, going deep into this story, obviously. Investors are, too, trying to figure this out. Is it a trend, or is this, a short-term trend, or is it something a little deeper, dare to say? All right, over the past few days, a Chinese AI company has been making waves in Silicon Valley, and my pen just dropped onto the floor.
I'll grab it for you. But yeah, go ahead, keep reading.
That's because AI models from DeepSeek have been scoring impressively on global benchmarks. The free open source large language model was unveiled in December. The lab behind it says it took 2 months and under $6 million to build. I think that's a key point right there. That's a fraction of what OpenAI and Google spent to train their models. Dave?
Yeah, $6 million.
How much has OpenAI and Meta and Google and Tesla spent combined?
Well, I know of more expensive apartments in Hong Kong than the budget it took to get this up. Last week, the founder of DeepSeek was the only AI leader selected to attend a meeting of entrepreneurs with Chinese Premier Li Qiang. And over the weekend, Xinhua published this editorial on how China's AI advances are working, despite Washington's tech curbs on the country. Robert Lee is with us, our Bloomberg Intelligence senior analyst. So, you told us so.
Well, we've been writing on this company for the best part of 6 or 7 months. And I think for anybody who follows the China AI sector closely, as we do, the profile has been relatively high in this part of the world. But what you've seen over the last week or so, prompted by the coverage and, as you said, the meeting with the Premier, it's helped raise the company's profile both nationally and also externally. And this story's been picked up by a number of external news outlets. But, Bloomberg Intelligence, some lead, others follow. We've been, very active on this for, as I said, for quite some time.
It was the talk of the town in Davos, from what I understand. So what is the secret sauce, if you will? Is it the low cost, or do they have the processing power for the training and the deep learning?
Yeah, well, taking a step back with the export restrictions you saw on the NVIDIA chips, etc., has been a major challenge. There is clear evidence, I think, that the big tech platforms, the Alibabas and Tencents of this world, both preemptively accumulated inventory of chips beforehand and have maybe, gained a helping hand from their friends in other parts of the world to gain access to these chips. But then for smaller companies such as DeepSeek, although they still have access to a sufficient number of chips, this challenge has prompted them to become more innovative. And so the way in which they develop the models is a far more computationally effective and therefore requires less chips and allows them to undercut their rivals cost-wise or price-wise significantly. So without going into the technical detail on DeepSeek, it's something called a mixture of experts. It's the architecture they use, one of the first in the industry to do this. They've really managed to forge ahead. And as you mentioned in your preview, are ranked top 10 in terms of global large language models. So I think, again, this just highlights and illustrates the point that whilst Chinese tech companies faced, problems on the semiconductor and chip side, they have a very strong track record in terms of innovation and software. Alibaba, Tencent are two of the world's leading tech platforms. And that, in numerical terms, China has more software developers than the US by a ratio of approximately 3 to 1.
And what does this mean for US AI in particular?
Again, I think, the Microsofts, et cetera, of this world were undoubtedly aware of DeepSeek, but, it's the headlines that have probably prompted them to have a little bit of a rethink and think how they can compete on this. I think one consistent point we've made over the last 18 months or so is that the technical barriers to entry on software are not as high compared to something like semiconductors. So I think there's already evidence that some of the US companies are moving to this mixture of experts architecture, and I would expect the rest of them to follow. So perhaps that could mean that DeepSeek's progress is forestalled to some degree, but I still see it as, one of the leading large language model developers out there globally. But again, it just shows that China is very closely positioned as the number 2 competitor to the US in AI globally on the software side.
What up? Howdy. It is January 27, 2025. If you listened to my weekend stream yesterday, I was talking a lot about DeepSeek, and then I transitioned to how AI would mess with productivity and then economics of the whole thing. So now we got our little drop this morning. What will be the trade I will do? Now, I should have kept my semiconductor shorts from Thursday to Friday over the weekend, but, I didn't think any of this would have mattered because DeepSeek was already the talk of the town in Silicon Valley for most of last week. So what up happened over the weekend? Did they just pump a bunch of news stories to scare out the retail? Let's see. Let us see. And Powell is going to talk in 2 days, along with tons of earnings. We got to get through the earnings as well. So let me remind you what the earnings are. AT&T reported earnings up 3 or 4% today. SoFi down 10%. So those were the major kind of tech earnings. Kind of tech earnings. I don't know. SoFi is like fintech, a little bit fintech kind of, and AT&T, well, telecommunications. I guess that's tech, kind of old school tech. But the real bad boys are coming in on Wednesday. You got ASML, big deal for semiconductors. Then you got Lam Research, LRCX after the close. So ASML before the close. Jerome Powell will talk 11:30 my time, 2:30 Eastern. And then Lam Research will report after, along with Microsoft, Meta / Facebook, Tesla, and IBM. All those will come out after, and that will move on into Thursday. So I'm wondering, has all this bad news, all it did was reset the chart to go back to where we started 2 weeks ago? 2 weeks ago on the 13th, when I told everyone to start buying everything up for Bitcoin, NASDAQ. Those were the plays to go long. So for 1 to 2 weeks, we had good results from that trade. Now, I started my short, and I can't really say like you should start a short now. We're already back to where we were. That's kind of the problem. We're already back to where we were on Monday. It's kind of risky to short there because you would rather short at a better position. And if we look at Hong Kong right now, I drew this gray line back in September. Squiggle, 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 squiggle. And eventually I think China will pop. So we got to go through all the supposed trade war talk. I'm assuming that's the next area where Trump will say something about trade war with China, maybe threaten some tariffs that he probably will not follow through on. That'll give you another dip on Chinese stocks. And then from there, buy the Chinese stocks, maybe February, March, into April for the next boom into the summer. So that's probably what I'm looking for Chinese stocks for a trade. So let's see what we got. KC up another 10%. Damn. I guess KC won't get back to my $7.50 target to test support. It looks like it's just going to fly up. If we look at KC, yeah, this thing has the potential to go all the way back up to $70. That was the top up there. So KC, oh crap. Yeah, I don't know. I don't know if I want to chase that. I was expecting it to pull back sometime, but maybe it's not going to happen right away. Let's see. Go to. Okay, that's still down, but okay, even after going up 15%, 5, no. Futu, maybe. TIGR, maybe. I don't know. I can't really recommend Chinese stocks at this position. I kind of want to let it continue on its sideways path until I get a better entry on these things. Gold, silver, probably not going to do much today. It kind of crashed a little bit and then went back up in the early morning because we have a liquidity crunch right now. If you look at the NASDAQ, it just collapsed just early morning in pre-market. It was going down all Sunday night. And then when we got to early morning, it did this. So this bar here, if you look at the NASDAQ futures, this bar is the size of it, basically from 21,100 to 20,700. Let's say that. So right now, we've recovered most of that loss in pre-market. So we got 20 minutes until the market opens. This will set the tone for the rest of the day. I haven't decided if I want to go long, though, today. Like, this thing could just fade all the way back down into the end of the day by close. If by close we get back down here to 20,700, then sure, maybe I'll think of buying something on the NASDAQ, like SMCI, if I want to take a chance on that stock again, or SOXL. So if you look here, I'll put up. This is what I usually trade right now. I use SOXL to go on the bull side. Okay. So when I'm bullish, I do SOXL. So this is what I did on Monday. I went SOXL. So 2 weeks I could ride this thing. Then when we got here and started rolling over and did this, It was just like, okay, I'm gonna start adding socks S, get rid of socks L. Did this, I'm gonna get rid more of socks L. I'm gonna add more of socks S. And when it did this, I sold. I should have kept some over the weekend, but it was the weekend, so I didn't like to hold things over the weekend with a short. I don't know if the news cycle would just pump it the next. So yeah, I could have did Sox S. So Sox X is the bear side. So SOXS is when you want to short. So yeah, I should have held it because I would be up another 10, 15, 20% depending on how it opens right now. It was trying to hit 20% overnight into the early morning. Oh well, I still have my MSTR shorts though. So if you look at that, MSTZ is the short. So use this to short. So I was like in $12. I added more at 13. I sold some at 15 on Friday, 15 something on Friday, and hopefully I can get something off of this if Bitcoin continues down. That's the question though. Will Bitcoin continue down? Because yeah, it's been trying to survive. It's been trying to survive this liquidity crisis here. So, but it hit this resistance line at 101,300 and it's pulling right back down. It might make another bottom here and then bounce up again. So I can't tell if I want to go long. Okay, switch my positions. And that will depend on the Nasdaq as well. So yeah, so right now if we look at the QQQ Nasdaq, it closed Friday at 529. So assuming we're down like 3 to 4% on open, are we all the way back to what it was on Monday? It was on pre-market. It was down 5% almost. So it almost went all the way back down to Monday, January 13th price. So this area, right, is probably where all the options are hiding out. So between 500 on the Nasdaq and 530. So yeah, that's a range for the QQQ. If you're looking at the ETF QQQ now, S&P, yeah, same thing, right? We got up here to the new high. Probably gonna go back down here. Let me check what the pre-market is, and then tell you. 595, so down 2% on the S&P. It was down to 591. Okay. So let's see where we're at. So not too bad. The S&P hasn't got hit that badly. It's not going to go all the way and retrace everything. So maybe it'll drop to 586 on that cyan line on S&P. So maybe I'll look for that to see if I want to go long there. But yeah, I'll think about it. So that's it. I'll just do a quick update on that. That's all I'm watching for today. And, if you got questions, just email me at crack, CRACK at jghb.info, CRACK at jghb.info. And remember to like and subscribe. Yeah, like and subscribe if you want more stuff here. Very good, very good. Okay, and let's see, 14 minutes till open. So I gotta wait until something happens. Usually something will happen. I gotta wait. Yeah, let me watch the Bitcoin and Nasdaq. Yeah, that whole huge bar right there is just gonna be the whole thing right now. And so yeah, go back to my previous stream. I'll put a link up. And you should use the playlist too to get to the previous stream. Okay. Okay, so there you can go look back at my previous stream on Sunday. And you'll get your info there about the DeepSeek. I won't talk about much about it here, okay? And that's about it. I guess I gotta wait for the open. And I'll probably come back maybe in midday. I can come back in midday and update you guys on what I think. And then we could go there from there. So SMCI, let's see. Yeah, I touched this resistance. I think it's going down to 29 and open. So it's SMCI. Yeah, it's about 30. It's going to be at 30, so down 8%. So if I use the SMCX ETF, see. So SMCX is 2x leverage. Okay. Down 18% at 36. So it's going to be SMCX going to be at 36. Yeah, I'm going to be watching that. So I don't know. If I'm feeling a little casino here action, I might go play for it. So, okay, so SMCX is 2x leverage of SMCI. So yeah, if I want to play a semiconductor bounce, I might play that. So good luck there. You can see how it goes there. But yeah, otherwise, stay away from most things. Keep your cash, keep your powder for Wednesday for the most part. If you don't see an opportunity today, yeah, just wait for Wednesday. I wouldn't be gambling on all those earnings and whatever. You're basically being a degenerate. Yeah, pretty much. You're basically being like just go for the easy plays, you know. Buying on Monday the 13th was a way easier play than doing this crap, right? Let's see. Yeah, right, see? Buying here Thursday 13th. Lots of stocks were down. Moderna, right? mRNA. Buying 13th. Yeah, you could have sold up here. So yeah, so $32. Yeah, if the show wasn't on hiatus, yeah, I could have gave you a 36% gain right there on Moderna, mRNA before Trump and all that. I mean, even if you didn't know Trump and Larry Ellison was going to talk about mRNA vaccines with AI, you still could have got in on Tuesday, right there on the 21st. So 1 week later, basically, and you still would have made some pretty good gains on that one. So yeah. So yeah, plenty of gains, plenty of stuff there. All right, guys. So very short today. I'm gonna wait for the open, see how it goes. But yeah, I'm just leaving this here for anybody that wants to watch and have any ideas of what I'm gonna do. But yeah, I'm gonna look for a long. I'm gonna look for a long play. All right, that's what I'm looking for. Oh yeah, bonds are up today. Yeah, bonds are up today. Yeah, it's trying to recover. I don't know. I don't know if that means anything. Dollar though, Dixie. Yeah, it's moving down. That's kind of a good thing, but I have to see if that really means anything. And then gold and silver, yeah. Oh, it's moving back down again. So yeah, I don't know. Gold, silver. So we're still stuck here. Gold and silver still stuck. Gold and silver still stuck. So no information there. Yeah, I'm not getting any information from that. Let's see what gold miners are doing. No, nothing. So yeah, very little hidden information. But yeah, Bitcoin is trying to move up now. So I might have to flip my short to a long, guys, and go from there. We'll see. But the Nasdaq has to break this big candle here on the future. So if you're looking in the futures market, you see this one. That's the candle you got to fight towards. This whole area will probably set up a range, and this thing is essentially where we were when I said to go long, right back where we were. So all the options are probably here. All the options are up here. You know that. And then Powell will talk on Wednesday, and that'll set everything up for the next February moves and earnings too, right? So all the February moves will be from there. And if February is a good month, then yeah, get ready for another crash from March and in April. I told you guys, you are not going to like it. You're not going to like this this first quarter. So people who are investing, you're going nowhere. You are going sideways, sideways. Yeah, see that? Down 4 or 5%, up 4 or 5%, down 4 or 5%, up 4 or 5%, down 4 or 5%, up 6%. Where are we going now? Down another 5%. Whew. You're stuck. You're stuck. Right between where we were when Trump got elected and when Jerome Powell opened his fat mouth. Right there and right there. So the range set in December 18th and November 6th. That's it. That's where you're stuck at. And you're gonna be stuck. You're gonna be stuck here until February, and then March will probably be when we break. We either break up or we break down. So in March, I'm guessing we're gonna break down in March. So look for another crash caused by something, I don't know what, in March, going into April, and then at that point, then you can buy. Then if you're an investor, then you can buy. Otherwise, you can't buy anything right now. We're just chopping around sideways. So it's only good for traders. All right. Okay, 6 more minutes till open. I'm going to be busy trading. So I'll see you guys later today, maybe, if I have some major updates to give before the close. All right. And remember, donate to Portia J with an E, okay? And then her email is in the bottom as well. So, yes, let me put it up for you guys. PORSHAJAYE. And it's HB's birthday. So, wish him a happy birthday and fund the show. All right. Or you can do PayPal. PORSHA@jghb.info. So, wish HB a happy birthday. And I'll see you guys.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go.